Okay, let's jump right in. We're diving deep into the Quantum Computing Inc. Q1 2025 shareholder update call transcript today.
Yeah, QCI. They operate in that, really cutting edge space, quantum computing, photonics. These earnings calls are often where you get the real story.
Exactly. It can be dense stuff, but our mission here is simple. Cut through all the jargon in that transcript and pull out the key insights, the stuff you actually need to know.
Right. We'll sift through what QCI's management actually reported for Q1, look at their projects, where they think they're headed, and what the financial numbers really tell us about where things stand right now.
So welcome. We're taking that Q1 transcript for QCI and asking, what are the vital few points? What's the real progress, the strategy, the financial health? Let's unpack it for you.
Okay, first thing to note, pretty significant actually, is a change at the very top.
Oh, yeah.
Dr. Bill Mann, the CEO, retired. Dr. Yoping Huang is now the interim CEO.
Interim CEO. So they're actively looking for a permanent replacement.
That's what they said, yeah. The board's searching now.
Okay, good to know. And just setting the stage, QCI, how do they describe themselves?
They really frame themselves as an integrated photonics and quantum optics company. The key theme you hear is delivering accessible, affordable quantum machines and photonic solutions.
And the emphasis is on solving real-world problems today, right? Not just some far-off future tech.
Exactly. Today is the word they use. They break it down into two main areas.
That's right.
First, quantum machines. Think optimization problems, machine learning, sensing, applications in biomed, transport, finance, that kind of thing.
Okay, the machines themselves. And the second?
That's their photonic chip foundry, basically making the building blocks, the actual chips needed for next-gen telecom, AI, even other quantum applications.
That's their enabling technology. So on that foundry side, what's the big news from Q1?
The major milestone. They finished construction of the foundry in Tempe, Arizona. That happened in Q1 2025.
Wow. Okay. Construction complete. That's huge. It's not just a plan anymore.
Exactly. It de-risks a big part of it. So now what?
Yeah. What's the status now that the building's up?
Well, now they're in the process of, testing all the equipment, getting the final certification sorted out.
The practical stuff.
Right. And starting to actually ramp up initial customer deliveries from this specialty fab. It's focused on lithium niobate photonic circuits, which is pretty specialized stuff.
Okay, so tools are being tested, certs are underway, initial deliveries starting. What does that mean for revenue, realistically, this year?
Management was careful here. They said expect modest initial revenue from the fab this year.
Modest, okay.
Yeah. The real acceleration, they think, that's probably 2026 as they scale up the manufacturing process and, get more customers fully onboarded.
Makes sense. Takes time to ramp something like that. Did they mention any early signs of demand?
They did. They highlighted securing their 5th purchase order for Foundry services. This one was from a leading Canadian research institute.
5th PO already. That's something.
Mm-hmm.
Shows international interest too.
Yeah, they presented it as early validation that there's global demand for what this foundry can produce.
Okay, let's switch gears then to the quantum machine side of the business. Any specific progress there?
Yes, they talked quite a bit about a collaboration with the Tri-Institutional Therapeutics Discovery Institute.
That's the big New York research consortium, right? Memorial, Sloan Kettering, Rockefeller, Weill Cornell.
That's the one. They're using QCI's Directo, that's their quantum machine, for computational chemistry, basically biomolecular modeling research.
So drug discovery type application.
Exactly. And management really emphasized this as a concrete real-world application happening now, not just theory.
That is tangible. What about NASA? I remember seeing something about that.
Yep, a new subcontract. It's through Analytic Mechanics Associates, but it supports NASA's Langley Research Center.
And what are they using the quantum machine for there?
They're applying the direct capabilities to try and remove sunlight noise from lidar data gathered from space.
Cleaning up sensor data. Lidar uses lasers to measure distance, right?
Right. So noise, especially sunlight, can be a big issue for space-based sensors. QCI framed this as building on past work with NASA, showing, trust and partnership.
Helping NASA get clearer data from space definitely sounds like a strong use case.
Yeah.
Any other customer wins mentioned?
They flagged 2 more recent orders. These actually happened after Q1 ended, but they shared them on the call.
Okay, what were they?
One was selling a quantum photonic vibrometer, basically measures tiny vibrations using light to TU Delft. That's a university in the Netherlands.
For research, presumably.
Yeah, for research into non-destructive testing and structural health monitoring. So think checking materials or structures without damaging them.
Interesting. And the second one?
That was the sale of an IMU reservoir computing device.
Okay, break that down. IMU is?
Inertial measurement unit, like the sensors in your phone for motion and orientation. And reservoir computing is a type of machine learning approach.
And who bought that?
A major automotive manufacturer for their R&D efforts.
Huh. Automotive R&D using quantum-related tech. That's quite diverse. Academia in Europe, NASA, biomodeling, now automotive.
Yeah, I think that was the point they were making. It shows that broadening adoption they're aiming for across different types of markets, different applications.
Makes sense. Anything else operationally? Any quick mentions?
Just briefly, they touched on marketing, being present at trade shows, and also strengthening the board, they added Eric Schwarz.
And his background is relevant how?
Apparently, he has a lot of experience in financing, M&A, and importantly, scaling up companies, which, seems pretty relevant for where QCI is right now, trying to commercialize and grow.
Definitely seems timely. Okay, let's pivot to the financials then, because the numbers looked a bit unusual at first glance.
Yeah, there's one number in particular that needs context. Let's start with the basics, though. Q1 2025 revenue.
How did that look compared to last year?
It was about $39,000, which is up slightly from $27,000 in Q1 of 24. So still very small numbers on the top line.
39,000. Okay. Gross margin.
That actually decreased. It was 33% this quarter, down from 41% last year. They did comment that, at these low revenue levels, margin can bounce around quite a bit.
Sure, makes sense. What about operating expenses, costs going up?
They did. OpEx was $8.3 million for the quarter. That's compared to $6.3 million in Q1 last year.
So about a $2 million increase. Any reason given?
They primarily pointed to higher employee-based expenses driving that increase.
Okay, so revenue's tiny, costs are up. But then you get to the bottom line, net income. That number looked huge.
It did. That's the one that really stands out. They reported net income of roughly $17 million.
$17 million. Compared to what last year?
Compared to a net loss of $6.4 million in Q1 2024. So,
Wow.
Yeah, a massive swing.
Wow. Okay, $17 million in profit on just $39,000 in revenue. How on earth does that happen?
Right. This is the crucial part. That $17 million profit, it wasn't really from selling more quantum machines or Foundry services.
Okay. It wasn't operational profit.
Exactly. It was primarily driven by a big non-cash gain, about $26 million, actually.
$26 million non-cash gain. What was that from?
It's an accounting thing. Specifically, it's the mark-to-market valuation adjustment of a warrant-related derivative liability.
Whoa. Okay. That's a mouthful. Tied to warrants from?
From their merger with a company called Coton back in June 2022. So think of it like this. Accounting rules required them to value these old warrants. Market fluctuations made that valuation change in their favor on paper this quarter, and that created this large non-cash gain.
Got it. So it significantly boosts the reported net income number, but it's not cash coming in the door from current business. It's an accounting echo from a past deal.
Precisely. That's a really important distinction to make when you see that headline profit number.
So if the income statement profit is mostly non-operational, where's the actual financial story this quarter? Is it the balance sheet?
Absolutely. The balance sheet is where you see the real change. It got significantly stronger. Total assets, for instance, grew quite a bit.
How much?
They reached about $242.5 million by the end of March. That's up from $153.6 million just at the end of last year, 2024.
Wait, up almost $90 million in assets in just 3 months. How?
Hush! That's the main driver. Their cash and cash equivalents balance shot up by $87.5 million.
$87 million in new cash. Where did that come from?
They tapped the markets. They raised about $93.6 million in net proceeds during Q1 through offerings of their common stock.
Okay. So significant capital raise. That explains the jump in cash and assets. What about the other side of the balance sheet liabilities?
Liabilities actually went down. Total liabilities decreased by around $25 million, ending the quarter at $21.7 million.
Down $25 million.
Yeah.
How did that happen? Was it related to that non-cash gain?
Exactly. That same mark-to-market adjustment on the Coton warrant liability that boosted net income also reduced the liability on the balance sheet, so it helped both sides.
Right, makes sense. Lower liability value means less owed, which also creates that paper gain. Okay, so big cash injection, reduced liabilities, partly due to accounting. What's the plan for all this new cash?
Management was pretty clear. This strengthened capital position allows them to invest strategically, specifically in their key growth areas.
Which are the quantum machines and the new Foundry, presumably.
Yep, funding the quantum machine program development and critically supporting the ramp up of the new chip foundry operations, sales efforts, everything needed to get that going.
That makes total sense. You build the expensive factory. Now you need the working capital to actually run it and sell its output. Okay, let's touch on the Q&A from the call. There was an interesting question about the new Foundry, right?
Yeah, someone asked about capacity. Basically, now that the Tempe fab is built, are they worried about running out of capacity quickly? And are they already thinking about building a second one?
Good question. So is Fab 1 already slammed? What did they say?
Not quite yet. Management acknowledged that, capacity constraints are possible down the line if revenue grows very, very quickly.
But not an immediate problem.
Apparently not. They emphasized that the immediate focus is more on building the ecosystem around the foundry.
What does that mean, building the ecosystem?
Educating customers on the technology, explaining what the fab can do, validating the products through these initial deliveries. They basically said that whole process takes time.
So the bottleneck isn't physical space right now. It's more about market development, customer adoption, proving the tech works for specific needs.
That seems to be the message from their answer, yes. They also mentioned making cost cuts last year, specifically to save cash, to finish the foundry build, and support this initial production phase.
Right. And now, with the new $90+ million they raised.
Exactly. Now they have the funds, and they plan to significantly boost their sales and business development teams.
Shifting focus from construction to sales.
Precisely. The goal is clearly to expand that customer base faster now, drive future growth. They even mentioned some recent internal promotions were tied to building out this sales effort.
Interesting strategic shift. And what about the idea of a second fab? Did they address that?
They did. They confirmed that, yes, discussions about a potential step 2, meaning a second fab, have already happened internally since Fab 1 opened.
So it's on their radar for the future.
Seems like it. While immediate capacity isn't the issue, they are clearly thinking ahead about needing more if things go according to plan.
Okay, let's try and pull this all together then. What does this Q1 update really mean for you if you're following QCI?
Well, on the one hand, you see clear operational progress. That foundry completion is a big deal. It's real, it's built, and they have these customer examples like the tri-institutional work, the NASA contract.
The TU Delft and automotive sales.
Right. These provide a tangible evidence they're applying their tech to what they call real-world problems today. It offers some concrete proof points in a sector that, often faces criticism for being too focused on the distant future.
Yeah, the foundry being done definitely marks a transition, moving away from just R&D and building towards actually trying to generate revenue from it, even if it's starting small, like that 39K number showed.
Exactly. And then there's the financial picture. You have to look past that headline net income figure.
Because it's mostly that non-cash accounting game.
Right. The real financial story this quarter is the balance sheet. Raising almost $94 million net gives them a lot of runway, significant capital to fund their plans.
And those plans seem focused now on investing in the machine development, yes, but really pushing the sales and operational side of the new foundry.
That's the clear message. Use the new cash to build the commercial engine.
And that Q&A about capacity kind of reinforces that, doesn't it? The challenge isn't immediate factory limits. It's building the market, getting customers signed up, proving the value proposition.
Yeah, their plan to boost the sales team directly reflects that focus. They've built the infrastructure with Fab 1, they have the capital now, so the next phase is all about driving sales and adoption.
Okay, so recapping the key takeaways from our deep dive into the QCI Q1 call. Foundry complete, check. Some notable customer wins showing diverse real-world applications, check. Balance sheet dramatically strengthened via a big capital raise, check. And a strategic shift now towards heavily investing in sales and business development to fill that foundry and sell more machines, with an eye on future expansion already being discussed.
That sums it up pretty well. And of course, just to be clear, this whole discussion is based purely on analyzing the information that was in that earnings call transcript. It's about helping you understand what was said, not offering any kind of financial advice.
Absolutely. Just unpacking the call content impartially.
Right.
Which leads us to maybe a final provocative thought for you, the listener, to chew on. QCI is clearly putting serious money behind this push, getting their photons to work, as they say, especially with this new foundry ready and the sales team scaling up. Looking ahead, what are the critical signals you should watch for? What would tell you if they're actually succeeding in turning this infrastructure and capital into truly scaling revenue beyond these initial interesting but small orders?
Is it just the raw revenue number growing? Or is it maybe the type and size of the new purchase orders they announce? Perhaps announcements about specific customers moving from evaluation to larger volume commitments for the Foundry.
Or maybe something less obvious, like commentary on fab utilization rates down the line. It's definitely something to think about. What evidence would convince you they've successfully made the leap from building the tech to building a scalable business?